Hello and welcome back to the next big thing. My name is Chris Global Head of Research at WisdomTree, and today I am excited to be joined by Mobeen Tahir, my colleague and friend over in London. I'm currently seated in North Carolina here in the U.S., so about 3,500 miles between us, as we are going to be discussing Thematic, the outlook, what's been going on, where we've been going, what we've been hearing from investors, all that good stuff. Before we begin, I do need to state the following to clarify: the views and opinions expressed in this podcast are those of WisdomTree and are subject to change. Anything we present in this podcast is not intended to be relied upon as a forecast, research, nor as investment or tax advice. The information and opinions expressed in this podcast are not a recommendation, offer, or solicitation to buy or sell any securities, and reliance upon them is at the sole discretion of the listener. Please remember, past performance is no indication of future results. And with that out of the way, Mobeen, I'm curious to sort of set the stage here and understand. I know you're always jetting around Europe. Where are some of the interesting locations you've been recently, and what have you been hearing from investors on some of these trips?
So it's that stage of the year, Chris, as we record this episode, end of October. Of course, many investors are now wanting to end the year on a high, and they're starting to think about what sort of things should be on top of the agenda for next year. So a lot of the conversations that we've been having all over Europe, and I've been to Switzerland, Germany, uh, Belgium, and many other places as well. And it's that same mood, it's that same feeling that what are going to be the big stories for next year, and are we prepared? Are we in a position to be thinking about the right sorts of ways to execute those stories for next year? AI keeps coming up. It people recognize that it's a megatrend that's here to stay. Some of the concerns that people raise are in terms of playing the megatrend in the right way so as not to fall into the trap of certain companies being overvalued or overhyped. So that valuation concern keeps coming back. How best to capture the next big NVIDIA-like success story? We latch on to that tagline in our conversations. Certainly, some of it's one thing we want to do with our strategies as well. But people are also keeping an eye on some of the depressed themes that have not been doing well in the last couple of years, but might make a comeback as we see interest rates coming down. So, people are keeping an eye on the clean energy story, which has been out of favor for a couple of years, but saw some signs of life in September with the China stimulus. Rates coming down, maybe that bodes well for some types of real estate. So people are keeping an eye there. So a few topics for investors to consider.
Absolutely. The macroeconomic backdrop is changing, is evolving. I remember about a year ago, if people sort of go with us here and think, what were you doing to position the portfolio towards the end of October, beginning of November 2023? And if we remember back honestly, there were certain economic things coming out that were indicating maybe inflation was well in hand. Interest rates are expected to fall and fall quickly. The policy at the Fed is expected to act and act quickly, maybe starting in, say, February of 2024. And what we saw was a huge run in the sort of software as a service segment, where we see that represented in certain cybersecurity type names, where the company is basically selling a subscription, and then companies like CloudStrike and Cloudflare and Zscaler and Okta, these companies rallied through the roof. In some cases, more than 40% in 2 months at the end of last year. And what's been interesting, if people have been speaking to us and following the idea of cybersecurity, we cannot say that the concerns are going down. If anything, they're going up. We cannot say that the risks are going down. If anything, they're going up. The regulatory environment, I mean, it's very focused that companies are doing their bit to protect the data of customers and to focus on, being reasonably well prepared for things like ransomware. So cybersecurity as sort of a need, a service, it only seems to be going in one direction. But then people start looking at the returns of the stocks this year, and it's almost as though the market expected a certain macroeconomic trajectory that didn't necessarily play out as they were thinking it would, and bring to bear fully that 40% return in 2 months at the end of last year. And so you've seen certain exciting megatrends like cybersecurity have a really rough 2024, but it may be, and I'm curious, Mobeen, if you're hearing people out there thinking as you get ready for 2025, is some of the positioning looking at software as a service or looking at cybersecurity as a potential area of opportunity going forward?
So people completely endorse the idea of cybersecurity and its importance as a structural megatrend. One thing we see a lot of agreement on, and in terms of the macroeconomic backdrop, Chris, is this idea that if you just look at the S&P 500 in the last, say, 3 months or so, we don't see any of the Mag 7 even in the top 20 top performing stocks. And I'm talking about purely in terms of absolute returns. Of course, Mag 7 with their market capitalization, even a smaller move can have a large contribution to your portfolio if you're holding the S&P 500. But purely in terms of absolute returns, none of the Mag 7 feature in the top 20 in the last 3 months or so. And this is something that is corroborated by our own research at WisdomTree, that, historically, going back to the 1970s, whenever we've had a rate cutting cycle start from the Federal Reserve, we tend to see that those mega caps in the subsequent 12 months are outpaced by others, other stocks beyond the mega caps. So we're talking small to mid cap companies, even large caps beyond the mega caps. And that, if that is happening again, if we are indeed seeing that happening again, the rally being broadened because we're seeing the interest rates coming down again, that's something that gives people a lot of comfort when they're looking at these sorts of themes, that maybe, because if they are exposed to a theme like cybersecurity or software as a service or even artificial intelligence, chances are, if you're picking pure players in these sorts of teams, chances are you are deviating away from some of the bigger mega cap companies, and you've got those other names in your portfolio as well. And the macro backdrop promises to be quite conducive, quite favorable for thematic investing once again. So we're seeing people have a bit more faith, a bit more confidence in looking at these certain themes. 2024, even though they believed in it, I think it just a macro backdrop with rates remaining higher for longer got people thinking a bit harder at these themes. But now they're finding a bit more comfort that maybe this is the place to be once again for 2025.
One of the things that, and so I was on a trip in Europe about 2 3 weeks ago, and in one of the cities, Stockholm, we had dinner with an investor, and it was fascinating because he sometimes when you speak to investors, you learn things, or at least you hear them in a different way. And he was presenting, he posed it as, what do you think the quote unquote greenest in terms of environmental, finding different sources of energy with low carbon emissions? What do you think the greenest state in the United States is? And as someone who lives in the United States, the knee jerk quick reaction is to say California. I mean, they note, I think by 2035, similar to certain European markets, you can't necessarily sell a new internal combustion engine car beyond that point. They, in many ways, having lived in Europe for 5 years, what California announces sometimes sounds almost as though they're trying to be more aligned with certain European perspectives rather than certain US perspectives. And so you step back and you say, okay, it's got to be California. Now, the issue that California has, though, is they don't necessarily make it easy to do new businesses and to be an entrepreneur and to start companies. It's possible, and you have the Silicon Valley there, but it's not, say, as easy as certain other states. And what the investor went on to tell me was he was telling me about Texas and how in Texas you can set up a wind farm or a solar farm or deal with those natural gas sources where they're flaring the energy, which might otherwise be wasted. And if you set up data centers and you set up now, data centers are intriguing in the sense that, and Mobeen and I have been alluding to AI as this big thing. So a data center, one thing it can do is train AI models. It can be used for inference on AI models, or it can do Bitcoin mining. In actuality, these are just different ways to do lots and lots of math and use lots and lots of electricity and get a certain output. And of course, in some models, that output, or in some cryptocurrencies, that output can be very valuable. And in other cases, you'd realize, okay, there's no guarantee that the output is extremely valuable, but you step back and you say, okay, you do lots of math, you get something out of it, and you use a lot of electricity. Now, what was intriguing was the fact that he was explaining to me how in Texas, the utility provider basically set up a deal where obviously in the summer, and I admit I sit in the US, so there's a lot of air conditioning use in the US. When I was in Europe, it wasn't necessarily the case. But in the summer, when there's a lot of air conditioning use, some of these firms essentially make a deal to say, we're not going to do as much AI training, we're not going to do as much cryptocurrency mining because the citizens need the power for the AC. But maybe in the overnight or when it gets a bit cooler, or you have certain environments where the wind is blowing a lot and the sun is shining a lot, there's too much electricity. So if you didn't use it, there would actually be a negative price. And these firms basically say, that's when we're really going to ramp up and we're going to guarantee the producers of this energy they're not going to be faced ever with a negative price because we're always on the market. We're always willing to pay at least a certain amount. And so in a way, you're keeping the providers of renewable energy in business when they otherwise would face a very difficult environment, a negative electricity price, possibly unable to continue their operation. And so you have this sort of interesting synergy occurring in Texas, possibly in other states as well, but the story that I was told was in Texas. And you basically have AI, digital assets and cryptocurrency, and renewable energy sort of all coming together and working in a nice ecosystem. And he was making the case to me that the greenest state from an environmental energy production perspective was the last state I would have knee-jerk reacted to, Texas, at the end of the day. And of course, we admit we haven't run detailed numbers, detailed analysis, but anyone in the U.S. or following political policy knows that the business friendliness that you would encounter in Texas is very different than what you might encounter in California. That is a very, very safe assumption to make. So Mobeen, I couldn't wait to relay to you and to the audience the fact that, sometimes we're out and we're having these conversations, we learn new exciting things. At WisdomTree, we focus a lot on energy, renewable energy, energy storage. It's been a tough investment ride for those that have taken the journey. Now you could say, look, it's a long-term story, and we agree with that. But at the same time, the saying it's a long-term story and then looking at recent returns, having the stomach to deal with those recent returns it's easier said than done at the end of the day. And I'm curious, Mobeen, what you're seeing from a renewable energy perspective, an energy perspective. I know Tesla had some announcements. They're selling a lot more of these. You actually presented to me, Mobeen, the idea of grid scale storage, and it seems that Tesla continues to be much more than just a car company, even if the cars certainly get the most attention.
Yeah, and it's a fascinating topic because that relationship until now was not widely appreciated. That on the one hand, you have these technological innovations which are very energy intensive, AI, cryptocurrencies, and so forth. And how are we actually going to power all of this will create very high demand for certain segments of energy. And I really liked what the International Energy Agency recently put out, because it's a fact that sticks to mind, and it certainly stuck to mine. And the fact was that if you do a single chat GPT query, which I do on a daily basis without even thinking twice about it, you're basically using 10 times the amount of electricity compared to a Google search. And that's just a phenomenal uh, phenomenal way to explain how energy intensive the AI revolution is. And the question now is, of course, if we are uh, going full steam ahead with this revolution, how are we going to power it? And we've been seeing big tech companies making big announcements on striking those renewable energy deals this year. Microsoft certainly, they struck a deal with a company called Brookfield Asset Management. $10 billion was the contract size, and the deal was to source renewable energy for their data centers. And Microsoft isn't the only company. In recent weeks, we've seen Google make announcements for securing small modular reactors. I think the number was somewhere between 7 and 8 small modular reactors Google wants to secure for powering its data centers. No wonder nuclear stocks are coming back into favor. And all of this, whether it's solar and wind, or it's nuclear, well, big data center providers are thinking about ways to power their data centers sustainably going forward. So I think data centers is a fascinating story, because until now we've been thinking about data centers as an AI story. Of course, you need the chips, you need the hardware, you need the energy companies to be running, you need the tech companies rather to be running these data centers. But now people are increasingly seeing that connection between data centers and the energy companies that will provide the energy for the data centers. And that's a very interesting dynamic. The third dynamic, I mean, speaking of data centers, it's not an energy story, but we also like the idea that even the developers of data centers are coming back into favor now that rates are coming down. So data centers are being seen as a real estate story as well. So multifaceted investment opportunity in data centers, but energy certainly is an important one.
You are seeing a lot on both the public and the private side, these sort of groups, whether it's private equity or other types of investors, putting together tens of billions of dollars focused on either building the infrastructure, building the data center, investing in the energy deployment for the data center, all these sort of different aspects that are designed to provide enough money such that you can first put the physical infrastructure in place that will then hopefully allow for some development of some type of software, could be AI, could be something else that produces, at least in theory, a ridiculous amount of value. I mean, you step back and as someone in the U.S. hearing and seeing in headlines 3 Mile Island as an example where Microsoft now has an investment interest to ultimately get that plant up and running and generating electricity and taking electricity from that. And it's important to remember, I don't think, because we get very hypersensitive, possibly for good reason, around the idea of nuclear, this or that. But I don't think anyone, had a serious health issue necessarily related to 3 Mile Island, but there were a lot of very, very negative headlines. And at the end of the day, you might be in a position here where you're seeing a resurgence, at least on the U.S. side, where people are willing to consider safely designed and deployed nuclear reactors that certainly don't need to be these gigantic, you always have that picture in mind of the gigantic concrete towers, which is one way of doing it, and maybe that way of doing it was designed in the 60s and 70s, and that's really now all anyone thinks of. And in reality, there are all these documentaries. I know there was a documentary years ago with Bill Gates where a statistic stuck in mind for me, which was basically this guy Nathan Myhrvold. Which anyone who loves megatrends and technology, you should definitely look up this guy Nathan Myhrvold. He was basically saying how you can design a reactor to use the waste product. He was standing in one of the areas in the middle of the country, possibly Kansas or Tennessee, where there was all these canisters of nuclear waste. And he was basically like, look, the reactor we are seeking to design could take this fuel that's already here, and if we don't do anything with it, it needs to just basically stay there because it's obviously still radioactive. And we can use this to power the United States for about the next 125 years. And you step back and you think about that and you say, okay, you're not creating new nuclear fuel. You're basically saying this fuel that's already there, it's not going anywhere. This stuff lasts and is radioactive a long time. And you can get a productive use out of it if you just think differently about how you design the reactor. You can design it in a very safe way that the typical high pressure steam that could create a meltdown that you might have seen issues, whether it's Chernobyl, whether it's Fukushima, these things can be sort of designed in a different way so that you would never say it's 100% safe, but the issues that you face in those circumstances would not be issues relevant to these new designs. So it is fascinating to think a technology that, Mobeen, when you and I were starting our megatrend journey at Wisdom Tree, we certainly were not talking in a serious way about nuclear, because the narrative at that point was, you want wind, you want solar, you want to shut down, at least in certain countries in Europe, you want to shut down the nuclear reactors. It's kind of funny because in some cases you shut down the nuclear reactors and you fire up the coal plants because people certainly don't want to be sitting in the dark. So that was sort of an interesting juxtaposition that you did see there for a bit. But now the nuclear discussion is seemingly completely back on the table, and it is a great source of energy if you don't want any carbon emission and you want a strong ongoing source of power.
Absolutely, and it's an exciting one to follow and watch. And then, of course, you have these, the nuclear fusion story as well. What if we have a breakthrough of that in our lifetimes? How exciting would that be? I mean, there have been some headlines on that, but what you're referring to is the traditional way of producing nuclear energy, and even that is back in favor. And certainly, I think that small modular reactors, I think that might be the big step forward in terms of the widespread adoption of nuclear energy. And for data centers, it bodes very well, because what data centers need is localized energy. That's why nuclear is almost sitting on par with solar and wind, because these are all localized forms of energy, if indeed you are relying on small modular reactors. So a very interesting new turning point, certainly, in the evolution of the energy space.
Now, Mubin, we talk a lot about the Internet of Things, or it used to be called the Internet of Things. Maybe now it's sort of AI entering things. Um, but to sort of set it up here, I mean, admittedly, one of the things that happens in today's world is we get so much information. Like there are probably 15 articles that I can access in the next 15 minutes that will tell me with a certain degree of granularity on what may or may not be happening with, say, the iPhone 16 and the demand or the lack of demand, or this reason why the demand may not be there, or this other reason why the demand may not be there. So we're sort of drowning in minute by minute, moment by moment information, with all sorts of people trying to come up with a story about, I heard this about the iPhone demand, I heard that about the iPhone demand. And the iPhone is important because there are very few devices that sell, something in the order of 225, 230 million units in a given year. And obviously, Apple wants to inspire. I mean, we see it. They say if you don't have a 15 Pro or you don't have a 16, you can't use our new AI features, which just came out as we're recording this. It came out a few days prior to recording this. So they're trying to inspire people to buy more iPhones. Makes sense. I'm curious if we move beyond the Apple story, which important story, and anyone listening could again see 15 different tweets, articles, headlines about Apple at any time. But if we think beyond and say, what about other devices? Are you seeing anything that leads you to think other areas of the market might be underappreciated because they don't get the Apple level of attention and scrutiny, but they are putting out very interesting AI devices and use cases in today's market?
Yeah, and I was actually thinking about this the other day. I put up a smart security camera, Chris, in front of my house a few days ago. And it's a smart device in the sense that it captures a certain image in front of my house, and then uh, you can specify what region must a certain intruder or a person lurking the premises must enter for it to give you a notification on your mobile phone. So you can very uh, clearly with your with a tap on your app, you can specify which region, and so you mark a boundary line in front of your house, and you say, okay, if someone is walking beyond that line, it's fine, but if they enter this region, I want you to give me a notification, maybe even an alarm, or call me. Uh, and then what happened was it gave me a notification, and it turned out when I checked the notification, it was me, because I was in front of my own house and I was doing something, getting out of the car. And that made me think, now, okay, I've defined the region, but I want it to not notify me when it's me or when it's my wife or people who are okay to be walking that region. And so I wanted that camera to do facial recognition and be even smarter and say, okay, if it's these people, then it's fine. But if it's someone I don't recognize, then I will give you a notification. To me, that's a very natural progression. That's a very natural next stage that a device like a security camera could take in its next model. It's not a feature that this particular security camera was offering me, but in the future, as a consumer, now that we know that that sort of technology uh, exists, or we're moving in that direction where facial recognition is getting better and better, you as consumers, you almost demand it. And that's the key when it comes to any AI on device. To me, it's like consumers have become aware of this very exciting technology, and you almost demand it, which is why all this talk about Apple iPhone 16 and what they're going to do with Apple Intelligence, they're almost risking disappointing people, because you almost expect an iPhone to have on-device AI capabilities, and the longer they wait, the risk is that maybe when they come out with something, people will be like, okay, this is quite basic. I was expecting something even higher, and hence you see articles written on both sides of the picture. But in general, the Internet of Things, if depending on which article you read, the sort of estimated number is that we've got maybe 18 to 20 billion Internet of Things devices in the world today. That number can vary, but let's just play with that number. Uh, some of the reports I've seen, they say in the next 10 years, we are going to double the number of Internet of Things devices. The implication is that, of course, even if a small percentage of those devices that we just call connected devices or Internet of Things devices have on device AI capabilities, then that means that the AI ecosystem and the companies operating within the AI ecosystem, as we see more devices become AI capable or AI enabled, will be quite different, because it won't just be the iPhones. It'll be these cameras and all sorts of gadgets, your watches and whatnot. and who knows what other players might enter the ecosystem. So I'm personally quite excited about this trend. I think devices are inevitably moving in that direction. People will demand them to move in that direction, and we'll have new players entering this space, and we'll have exciting companies to follow. It's not just Apple. Google with their Android software, they've got their own on-device AI capabilities that they're announcing, and I think we'll see more AI, on-device AI on laptops, on your various consumer gadgets, even cars. Like that's another one I'm excited about. I mean, I'm a car enthusiast. If you speak to a car's digital assistant right now, it gives you very basic responses and functionality, like maybe it'll play a certain song for you, or something like that, set the temperature. But if you want to give you a very smart response about a certain breakdown that might happen in the car, or something along those lines, that functionality isn't there. But we are indeed moving in that direction, where cars will have practically a talking chat GPT like digital assistant, which would be cool, because any device that's got digital capabilities, that's collecting data, it it means that it's ideally suited for AI to better process that data and give the user a better experience.
It's amazing. Your story, Mobeen, about the camera made me think. We also have around our house here in Charlotte, North Carolina, a camera system, and one of the smart aspects, it's not always on, in the sense that motion turns it on. So something's moving, something you might want to see, turns it on. Now we have 4 dogs. I don't know if I've mentioned that on the show before, but any other dog lovers out there, I'm saying hello. I get you. I understand you. And we have 2 giant, Australian Labradoodles and 2 small Pomeranians. Now, one of the things my wife did recently was we had to shave our larger Labradoodle, the male, and we gave him a sweatshirt, which is, a dog sweatshirt with a hood on it and everything. And the funny thing that happened with the camera system is when he didn't have the sweatshirt on, the camera system recognized a dog in the backyard, which is obviously dogs need to go in the backyard a certain number of times a day. Everybody knows that. But when he had the sweatshirt on, it recognized, quote unquote, a person in the backyard, which is hilarious because, you're basically at a point where the system is hinting to you that it can recognize a certain kind of clothing and then come up with a hypothesis, a prediction that only a person would wear, because usually dogs are not wearing sweatshirts, which is a perfectly rational thing, and whatever data in the training set would probably not have a huge number of dogs wearing sweatshirts. So in the one hand, it makes complete sense, but in the other hand, it is hilarious to see these kinds of things where it feels like the system is on the cusp of being extremely capable, but it still makes these sort of silly prediction. And you always have to force yourself to say it's predicting that you might want to see X. It's predicting that you might want to think or pay attention to Y. And it's always a prediction. As we know with predictions, they can always be wrong. And we as humans, when we see now that these are low, what Mobeen and I are talking about are low consequence predictions. If you're talking about a self-driving vehicle that's determining, whether or not to stop or slow down or do this or do that, those are obviously higher consequence predictions. So every prediction has its own context, and you have to be aware of that. But it is interesting to sort of do these real-time experiments with cameras and image recognition, which are quite important areas. Now, Mobeen, something I know you talk about a lot, I talk about a lot, particularly when I go to Italy, because in Italy, people love to get really, really excited about the potential of biotech, which to me feels in that zone of, we haven't necessarily, for example, seen personalized medicine yet. We haven't necessarily seen companies out there, and we're familiar with companies like Exscientia and Recursion Pharmaceuticals, and the fact that Isomorphic Labs, which was sort of spun out of Google DeepMind, and of course we saw Demis Hassabis and his colleague get the Nobel Prize for their work in sort of predicting cells and proteins and the shape and all of these different aspects. So we're at sort of this incredible point in time where we might be 5 years, 10 years from now with what we're doing with some of these systems could be absolutely incredible. But for any investor that's been in, say, the biotech space for the last, say, 2 or 3 years, they've been sort of scratching their head, probably looking at the NASDAQ 100, S&P 500, various information technology indices, having a bit of regret, having a bit of fear of missing out, maybe getting out of biotech. A lot of people have done that, moving into some of these other areas where maybe it's a little easier to see the thesis coming to fruition a bit sooner. But nobody in my conversation says, I really hope that I can go through my email 25% faster. Nobody gets excited by that, or at least not as excited maybe as they should get if they really think how much time they spend in email. But everyone gets excited about the possible innovations, cures, therapies for important diseases where there are people out there who are really suffering with these kinds of things. And it just feels like we're quite close to a lot of powerful innovations in biotech. And Mobeen, I'm curious what you're seeing, what you're hearing in those conversations with investors.
I think that recent Nobel Prize for the developers of AlphaFold, that to me was a big turning point, Chris. I think uh, that symbolizes recognition for AI entering the mainstream. That a Nobel Prize in chemistry has been awarded to developers of an algorithm that is doing something that has profound implications for discovering drugs and so forth. So, very big news to me in terms of recognition of how important AI is to medical science, and I completely concur in all of our conversations, whether people actually put their money behind the megatrend or not. People are certainly fully convinced about how important it is. I think people are just waiting for just the right time to go into a theme like that, and sometimes you need a bit of momentum in terms of performance for people to find the courage to invest, and maybe that's been keeping biotech back. But I think the AI relationship with biotech, it's not a new one. It's been around. AI has been having an impact on the biotech space for quite a while. But the new forms of AI are very exciting. And one thing that stood out to me, I was recently looking at Stanford's AI Index report, and I do encourage people to check that out. It's a very exciting report if you're interested in the topic. One chart stood out to me where they said that researchers, they used prompt engineering, and that's a new hot term, Chris. Prompt engineering to train large language models. I like that term. And they trained GPT-4 with prompt engineering, and they called this process MedPrompt because they were training GPT-4 to become more proficient in medical questions, basically. And as a result of their prompt engineering, which was to prompt GPT-4 to gradually start giving more and more accurate answers with regards to medical queries, the accuracy rate has gone up last year to 90% plus. This is a 22% increase compared to the year before. So only a few years ago, this accuracy rate was at a level which which would basically be a fail in any examination. But now we're talking about a 90% plus accuracy by a large language models in giving answers to very sophisticated uh, medical questions. And I think when we talk about whether AI is overhyped, or have we um, gone too far in terms of uh, how much credit is actually due? I think these sorts of examples remind us that we're nowhere near that sort of situation where we would say that it's overhyped. In fact, if anything, we don't even understand how much of an impact AI can have in so many different industries, biotech being one. Equally, you can make the case in finance, manufacturing, transportation. Yeah, I mean, you mentioned autonomous vehicles. We're only beginning to see some autonomous vehicles. There's so much more that we expect on that front. Medicine, teaching, you name the discipline, and in so many places, AI is only just getting started. So I like the idea that as an investor, you look at these underappreciated stories. You look where there is a real impact of AI, um, and uh, and you look whether that impact is fully appreciated by markets. And I know I'm fully in that camp that believes that it's impossible to predict and price in that impact that AI will have in these sorts of industries. So whatever is being priced in is nowhere near a complete picture of what the future holds.
One of the things I wanted to ask you, Mobeen, and you alluded to the fact you're an auto enthusiast, and as we sort of look at what's going on in the auto space these days, I was in Germany in Frankfurt and Stuttgart um, a couple weeks ago, and the tone has continued in all sorts. People don't have to look that hard to see headlines about various German car makers, possibly Volkswagen at the top of the list, possibly closing down some plants, laying off some people. So there are a lot of issues, but the feel is that a few years ago we were all, including us at Wisdom Tree, saying electric vehicles, this is it. Everyone's going to want one. At certain points in time, you look at the road, you're only going to see electric vehicles. And on some of my trips up to Stockholm and Helsinki, it may be that it's kind of hard to find a internal combustion engine vehicle in those markets. But you go to other markets, including where I sit in the U.S., and it's certainly not even close to 100% electric at this time. And so you definitely have this variability. For certain car companies, electric vehicles are quite expensive. That's what the investors in Germany were indicating to me as one of kind of the core problems, in the sense that if the cost isn't able to be brought down to a level where you can have that sort of mass market appeal, a good solid car at a low price that most people can access, that tends to be what people say is needed. And for many of the established automakers, including those in the US, that's not yet the case. In China, on the other hand, possibly due to government interaction, subsidy, investment, whatever the case may be, companies like BYD are able to put an incredible vehicle out there at an incredibly low price, such that maybe even with tariffs in the European Union, people would still find it an attractive buy. So you've got this sort of interesting scenario where you wonder, were we too enthusiastic as a society about going to electric vehicles? Did we sort of overhype and overpredict the speed with which that would occur, or is it all just a narrative? And at the end of the day, these ideas of not selling electric vehicles past whether it's 2030, 2035, 2040, depending on the market, these things are still perfectly intact and everything is on track. I'd love to get your take, Mobeen, on what's been happening there.
On the Volkswagen story, Chris, I was personally quite saddened to see the announcement that they're considering, shutting down maybe 3 plants. First time in their history, they're looking to shut plants, laying people off. Not because I have any personal affinity with the company, but I do have a connection because I drive a car by one of the brands of the Volkswagen Group. So I love that car. So I personally was quite disappointed to see the trouble facing the company. I think what some of these uh, established giants in the automotive industry, what they've done is they've perhaps followed Tesla's model when it comes to electric vehicles. Now, Tesla's model was to go in the premium segment and sell vehicles which are not necessarily uh, the mass market, but create hype and excitement around relatively expensive vehicles, but a premium product. And that is something which I feel even most of the other manufacturers, like if you look at the German manufacturers, I don't think any of the big names, the Mercedes, Volkswagen, Audi, BMW, they're still operating in very luxury uh, categories in terms of their electric vehicles. And of course, they've been making sales. There are still buyers of that segment in terms of their vehicles. But what the Chinese have done is they've done something completely different. They're targeting the mass market with more competitively priced vehicles, and that's caught these companies off guard, because for mass adoption, uh, ultimately you want options. You want people to have the ability to choose if they want to go with a more premium product. That's also should be on the menu. But equally, if they want something a bit more reasonably priced, that should be on the menu as well. And maybe that was not on the menu when it comes to what many other automobile manufacturers in Europe have been offering. And not saying that there aren't any low-priced options, but there a lot of them are being caught off guard by the likes of BYD and so forth. So I think it's a structural story. I think it's not going to be fixed overnight. I think China is years ahead of European car makers, even Japanese car makers. Like I've written about this in the last year or two, how BYD has caught the likes of Toyota off guard, because Japanese automakers just didn't have a viable EV strategy. And EV adoption, and you're absolutely right to observe that EV adoption is different in different parts of the world. But if you offered a competitively priced electric vehicle to people all over the world, and the infrastructure was there to charge that vehicle such that it was not an inconvenience for them to be making long journeys, my bet is people would, the adoption rate would be much higher, because I'm a big proponent of the electric vehicle technology. I drive electric myself and I love it. I think it's an efficient car. It's a good driving experience, but of course it's got its drawbacks. If you drive long distances, you need charging infrastructure. If you depending on your budget, of course you want choices for all sorts of customers. So not all regions have incentives. For example, certain regions offer tax incentives, and that's improved the situation. Certainly, that's been the case in the UK, but elsewhere maybe not so much. So uh, there's that side of the story. Of course, European car makers are in a bit of a peril, but the Chinese EV story is very strong. And if you're in that space, an automobile investor, if you're looking at Chinese shares, I mean that's a promising story to follow. Like you said, despite the tariffs, they're penetrating the European market very quickly. Even here in the UK, I've started seeing more BYD cars on the road in the last few months. Um, so that situation is changing very quickly. Exciting. I think competition is a um, good catalyst to get these companies thinking a bit hard, and all of these companies will now start thinking, okay, there are these competitive products out there. We can't just uh, stand behind tariffs to protect our businesses forever. We need to come up with our own more competitively priced products. and they're a bit behind, but I think now they'll be catalyzed and spurred into action.
It'll be notable to see as we do this recording. It is 4 days before the U.S. Election. It's an election, of course, of the House of Representatives, various governors, various states. But of course, we all and globally, everyone focuses on the presidential contest between Harris and Trump, and seeing where that leads us. The word tariff is obviously one of the favorites of former President Trump. So we'll ultimately see if by the next episode, the next recording, we know who is going to be sitting behind the Resolute desk in the Oval Office, and whether or not tariffs are going to be as central as at least some of the campaign discussion is making it seem. In the economics textbooks, going to school in the early 2000s, the way things were taught, tariffs were always bad. I don't recall any examples where they were good, but you definitely see how former President Trump portrays certain negotiating tactics and different things around that. So, remains to be seen if people are going to go with that story or if they're going to choose to go in a different direction. But Mobeen, we're probably at that point where it's time to put your crystal ball into the slot on the desk and start thinking about, and at Wisdom Tree, we focus on a huge array of megatrends. We have our thematic universe that I'm sure some people listening have gone to the website before and recognized, wow, there's this monthly report where you can actually see not the Wisdom Tree funds, but the funds relevant to your region. If you're in the US, we have our US version. If you're in Europe, we have the European version, because obviously different funds are on the menu depending where you are. But you basically step back and say more than 1,000 funds represented under the hood of each report. Where's the money going? Where's the focus? In the US market, semiconductors for the last couple of years have been unbelievable. And I think you basically say, okay, you've got NVIDIA at the top of that list. It's interesting that AMD, as we're doing this recording, reported earnings maybe a day or so ago, and their projection, I think, for the current year, 2024, was somewhere around $5 billion of revenue. Their projection, I think, for the next year is going to be somewhere around $8 billion of revenue. I think in a normal condition, that's incredible growth. But in a condition where you're being compared to NVIDIA, no matter what you do, you look like you're caught flat-footed, because NVIDIA is basically putting up on the board one of the best business stories that we've ever seen. And what NVIDIA is doing makes it very difficult to take the crystal ball, interpret what you're seeing, and think that anything other than semiconductors is going to be leading the way. Now, we all know that something other than semiconductors will be leading the way at a certain point. The semiconductors lead of most other megatrends. It's getting a bit long in the tooth. We all know that. And yet, anything you hear, anything you read, anything you focus on out of NVIDIA, you can't help but just recognize, yeah, it looks really, really strong. So I'm curious, Mobeen, if we put semiconductors to the side, are there any areas looking into 2025 that get you particularly excited?
I think, Chris, the energy transition story is going to make a comeback. And I think for three reasons. One, of course, if rates continue to come down, that removes one of the biggest headwinds that the sector has seen in the last couple of years or so. So a lot of the businesses that you see in that clean energy space, whether it's renewable energy, battery manufacturers, so forth, these are very capital intensive businesses. And of course, higher rates and rates remaining higher for longer, it doesn't necessarily bode very well for them. So the opposite happening, rates coming down, is something that is very good. Second thing is stimulus in China. We got a little bit of a glimpse in September when the People's Bank of China announced its monetary stimulus. Strong positive reaction in some of the themes that are linked to this green energy transition story, because a lot of those themes have a fairly high exposure to Chinese-linked assets, whether it's miners of materials like copper and nickel and so forth, or it's um, uh, companies that are manufacturing various things, or renewable energy providers and so forth. So uh, if indeed we see that fiscal stimulus that markets are putting their hopes on in China, that could be pivotal in lifting Chinese assets sustainably in 2025. Of course, I said if, because if that doesn't happen, the markets could be disappointed again. So there's quite a binary outcome there. But I'm saying that hopefully, policymakers know that the risk is that they end up disappointing markets. So I think they will come up with something meaningful to generate interest. So that's number two. Interest rates coming down, China, and number three, there's in terms of investors, I think investors are seeing this as almost as a value story. If you believe in the long-term energy transition picture, whether you look at the commodity prices that are going to make the energy transition happen, copper, nickel, aluminium, zinc, tin, platinum, silver, um, or you look at the equities in this space, they are both very, very low after a sustained period of weakness. So it's almost become a value investment opportunity given the long-term prospects. So for that set of reasons, I think that's the story that's not being talked about as much as semiconductors and cybersecurity. Of course, those are the obvious themes to stand behind, but this could be one that makes a comeback next year.
Yes, and I admit I wrote at the beginning of this year / end of last year a lot about biotechnology. We've been following the space through the year. There are certain bright spots. I know The Economist in a recent issue was talking about the GLP-1s and different classes of drugs in that sort of area, like Ozempic, as being so multifaceted and having this potential to ultimately influence so many other areas of different economies if, again, they continue to prove their worth as they've done, at least so far. And so you step back and you say, okay, that is sort of arguing for the large cap pharmaceuticals that have a connection to that space doing particularly well. And if we can get some of these other technologies, I know the CRISPR companies, and that technique has been around since roughly 2012, and it's sort of combining with the messenger RNA theses and different discussions that people have, whether it's on companies like Moderna, who are trying to prove that a lot of these therapies, they do get associated with the COVID-19 vaccine and vaccines in general, but they can also do so much more than that. So it's looking like massive outperformance for biotech is not a 2024 story, at least in the broader parts of the market. Maybe 2025 is the year again after such a prolonged period of kind of being out of favor and not necessarily in focus. But with that, we've taken an hour of our audience's time, which is always roughly the goal. I want to thank everyone for tuning in today, listening to Mobeen and I sort of predict and discuss and digest what we're currently seeing, what we've been hearing from the market, and where we think things ultimately could be going. Thank you for tuning in to The Next Big Thing. Do not hesitate to follow, to rate, to rank, and to leave any and all feedback so Mobeen and I can get better with how we host this podcast. But we look forward to speaking again soon. Take care.